to provide you with simple and actionable steps that after our talk you can say, hey, I can use this and I can make I can become a better trader. Before I go on and talk about all of those things, I want to tell you a little bit about my background. Who am I and how come I'm doing what I'm doing? As I mentioned, I'm the founder of Mental Edge Trading. I'm an expert in human capital risk, which we're going to talk about what it means. I help people to understanding, and that way how to, and show them how to mitigate it and increase their P&L. I worked on Wall Street for more than 15 years. I was in the heart of action on the trading floor of such financial giants such as Morgan Stanley, BT, UBS, Chase, JP Morgan, among others. I've been around. I worked as a business analyst, strategist, and project and risk manager. I was on the fast track of success and turned strategic visions into working realities. I was one of the youngest people who became VP, and people started noticing, and they started asking me what was I doing, what was my strategy, what was my tactics. And when I shared those with them, they started using them and they started getting the same results. Word got around, and they started word got around and they came to me more and more with the request of, Nazy, what are you doing and how you're doing that. So that's how I started my business. But life wasn't always this way. From my accent, you probably have figured out that I wasn't born in this country. When I came with my family here, I was the oldest of 3. And even though I barely could speak English, I became the translator for my family. And after a few years, I started my dad's business with him. And that's how I learned to become an entrepreneur, because we are all entrepreneurs. As a traders, we are own CEOs of our own companies. Within a few years, I mean, I went to high school here, I went to college here, and I got my master's degree. And by 1988, when I first got married, I had bought my condo and I had my Porsche. And that was my pride and joy, and I was enjoying it. 2 short years later, when I was going through my divorce, I had to borrow money from my dad to rent an apartment. And I was working full-time. That was the most embarrassing thing that I had to do. And I promised myself that I would never, ever allow that to happen to me again. But I took responsibility. I said, what was my role in this thing? How did I allow this to happen? So I was working on Wall Street. I started reading a lot of books, going to seminars, studying with a lot of gurus, and I started using those principles in my life. By 1998, I had bought my beautiful 2-bedroom condo in Manhattan. I had a very diversified portfolio. In 1999, I started my consulting firm, and in 2001, I married again, and I'm still happily married. I'm not telling these things to impress you, but my emphasis is that if I can do it, there is no reason for you guys not to do it. That when you use the strategies and these tactics, you can achieve the life that you want, and you can have a harmonious life. And excuse me, I have a little bit of cold, so you might forgive me for my throat. For the past 8 or 9 years, I've been training traders from all walks of life on a little bit known secrets. And they've been able to develop these kind of lifestyles for themselves. Being on the trading floor, it allowed me to witness the frustration, the pressure, the avalanche of data that it was coming to the traders, and they had to perform under extreme conditions. I noticed something very, very strange. What was it? Just imagine you have two traders. They have exactly same access, same education, same computer system, same background. Everything is the same. But one is making a lot of money and the other one is just doing okay. So I tried to notice what the difference was. It wasn't their intelligence, because we know that a lot of people who get in the trading business are very smart people. I mean, I'm sure that you're among them. What differentiated them was their inner game, their mental edge or their competitive edge, their mindset and how they use their mindset and their belief system. Imagine this. Imagine a game of basketball. And when a player makes a shot, think about it as a trade. And the player might lose that shot. Okay? If his or her focus is on that shot, guess what's going to happen? They probably will lose the game. And if he focuses on the losing game, what's going to happen? They can lose the season. And you don't want to do that. So if you think about a trade as a shot, your trading day as that game, and your trading system as your whole account, you can see how beneficial it can be if you develop that inner game or your mindset to that. What we're going to cover today is simple and yet powerful processes. Don't let the simplicity of it fool you. It's simple because and it's designed that way so you can take actions on it. I remember that one of my clients was very successful. He was working in one of the huge companies, the Fortune 500 companies, and he had a huge loss. And as a result, he became gun shy. He couldn't pull the trigger. He was so brilliant that he would give advice and other people would use his advice and make money on it, but he couldn't do that. So we worked through these strategies, and he realized how he can get back into the game, and I'm happy to say that he's making more money than ever before. So is it good or is it good? Let's get started on that. Okay, let's start with what is human capital risk. Imagine this. When you're starting your trading business, you're thinking about markets, your strategies, your systems, the common risk, market, credit, operational. And you have set all these things up and you expect certain P&L, but you're not getting it because you know what to do, but you don't do it anyway. That is what I call human capital risks. Because a lot of people spend a lot of time, money, and energy on optimizing their markets, their strategies, their systems, but they forget to spend money and invest in themselves. How does that impact you? It impacts all aspects of your trading. Because if you're not focused, if you haven't had that handled, you can overtrade, you won't be able to focus, your discipline goes out of the way, you're not going to make money consistently, you won't have the confidence, when you increase your position size, it just goes haywire, you don't know how to handle losses and winners. And for a long time, people had taken these things for granted that this was part of doing business. But the truth is that you can do something about it. And if you ignore it, it can have catastrophic consequences, especially in volatile markets. You might have heard of the Barings trader, and this lonely trader wiped out a 233-year-old investment bank just because he hadn't had things in check. So what are the 5 game changers and how to cover that? cover your blind spots. Not that we know what human capital risk is. Let's pay attention to it and see how we can use that. The first game changer. Imagine this. You're ready to take your trading business to the next level. You realize you can cut your learning curve by finding a great mentor. You hear about these mentors who have great successes. You buy their books, sign up for their programs, mentorship systems, or whatever else they offer. You are excited. You get started. You might have some success. Then everything stops. What are the impacts when things stops? You feel bad. You might get mad at the mentor, the system, or the markets. You might think, well, this works for others, but not for me. You may start questioning who you are and what you do. You may start doubting yourself. You may doubt your capability and judgment. Your trading may become even more erratic, and you don't know what to do anymore. Does that sound familiar? Here is why. When I ask a lot of traders why they are not succeeding, they said it's like they are missing something. They have to do the things that they don't want to do. They're following a model that doesn't resonate with who they are. You know what I'm talking about. When something doesn't fit who you are and you feel obligated to do it anyway, it feels like hard work, doesn't it? You get some results and your growth is not sustainable. So how do you feel? You might feel overwhelmed, frustrated, exhausted, not smart enough. I know I have felt some of those feelings sometimes. So what is the fifth game changer? Is that the majority of traders don't consider or don't know how to fit what they are learning with who they are and their desired lifestyle. They say knowledge is power. I don't agree with that. I say the application of knowledge is power. You know, to achieve any kind of results that you want, you need to not only understand the information, but know how to adapt it so it fits into your trading business and your lifestyle. As Gail mentioned, I had the pleasure of being at her seminar, and I remember she was sharing that how she has fit her trading business into her lifestyle, because she was mentioning that when she wants to have time with her grandchildren, she would just take that time. She wouldn't worry about it. And that's what a sign of a successful trader is. I mean, you guys have an amazing role model. So pay attention to a lot of things that she's saying and apply that to your lifestyle. The main questions that I want you guys to consider is, how can I use this information? How can I adapt it to my lifestyle? It's important to first understand the information and then be able to adapt it to who you are. Because if you don't adapt it to who you are, it's one of the signs of sabotage pattern. That's how people get sabotaged. If, you know, you're following a person who does a certain way of trading, you force yourself, but it doesn't fit with who you are and what you're doing it, you get some success for some time, but then after a while, all of the resistance comes up because that's not who you are, that's not how you think, and that's very, very important to notice. So what can you do about it? As simple as it sounds, know who you are. What is your risk profile? Be very honest with yourself. Ask, does the strategy fit me? Am I comfortable with the risk-reward ratio? Am I comfortable with the frequency of the trade? I have seen a lot of traders get bored with their trading business. And what happens as a result, they start overtrading. They see signals where it doesn't, you know, sit. So understand, is the market that you have picked is the right market for you? Is the frequency of it, is it right for you? And if the strategy doesn't work for you, know that you are in charge and you can change that. That takes us to the next game changer, which is a lot of people don't pay attention to their financial thermostat. What is a financial thermostat? You know what a thermostat is? That when we set it at a level, it can go up and down a few degrees, but it always back to the level that we have set it. And we all have a financial thermostat. We all have a financial capacity that we might not be aware of. Let me give you some examples. It's like for some traders, as soon as they start increasing their position size, they start losing. Have you noticed, or do you know some of those traders? And then they think, I can trade a larger size. It's not for me. And part of them thinks, I should be content. Another part gets mad at themselves. They start comparing themselves with others. And then anger and frustration comes in. Their confidence goes down. They look for shiny, bright objects, which I call, and then they jump from one system to another, from one market to another, from one strategy to another, because they think it's outside of themselves. They think that the grass is always greener on the other side. Another scenario is that when they are on a winning streak, they go ahead and they win, and then the next month it seems that they are picking all the losing trades. And then the next cycle starts and they pick all the winning trades. And it's like they are on a roller coaster. And they go through this whirlwind and they have this yo-yo effect and they don't know where it's coming from. It's crucial to know where your financial thermostat is set and how it is set. Usually it's set unconsciously, and it's based on our parents and their attitudes about money, you know, what you have observed your parents do, how they behave, how they interact, our friends, our religion, authority figures, cultures, teachers, media, just to name a few. With those subconscious ideas, how we learned it, there are some beliefs that comes with it that you might have heard. It says money is the root of evil. Rich people are greedy. You have to work hard to make money. I had a client who he had that kind of belief. He was very, very successful. There was a point that he had all the toys. He had the planes and jet skis and you name it, he had it. But one day he realized, or he had forgotten that how much he has accomplished, and he says, but I'm not working hard anymore. And what happened was that he lost all of his money because he was saying, you know, my activity is equal to productivity, which is a myth. So we worked together, and I'm glad to say that, you know, we looked at it in a different way. So now he is back to the level of success that he has, and he's not sabotaging himself. Another thing that you might have heard is that you can't be rich and spiritual. I remember meeting Doug Witt at a 3% club, and he has served 2 presidents. What I remember from his story is that he was the son of a preacher man, and he thought that it's a sin to be rich, or rich people are evil. So for several years he was poor. Then he realized that by not using all of his gifts and talents, he's not really serving others. If he has a lot of financial concerns, he cannot be at service to the others. So he realized that it's actually, if he's not using talents, that's when he's not spiritual. That's when he's not using all of his gifts. Another thing that you might have heard is we cannot afford it. Money doesn't grow on trees. What am I? Am I made of money? Money doesn't buy happiness. The rich get richer and the poor get poorer. You might have heard some of these things. So what can you do about it is to really understand where your financial thermostat is set, to think about it and be conscious of it. And if it doesn't serve you, you can change it. So pay attention to it. Pay attention to when you are having your yo-yo effects. Pay attention to your beliefs and ideas. That takes us to the third game changer. The majority of traders seem to have one foot on the gas and the other on the brake. What do I mean by that? I mean that, you know, the traders come in and they tell you what their dreams and goals are, and in the next sentence, they tell you all the reasons that they cannot have that. Have you been around those people? Have you noticed that? What they might say, their reasons they cannot have it is that I don't have money. Markets go against me. I'm not good enough. I need to learn a lot more and it's not feasible. This is not the right time. I don't have the time. I'm too old. I'm too young. Who wants to be one of the top percents anyway? I'm okay where I am. You might have heard some of these things. Then what happens is that they feel worry and concern. They have a pit in their stomach. They feel exhausted. They might not have enough energy, and worst of all, they might not feel that they are in control. You know, believe it or not, a lot of people are afraid of success. They don't know how to deal with the consequences. They might say, okay, what if I don't succeed? What if I fail? Or if I succeed, what am I going to do then? What if I can't handle it? Success has become one of the things that I notice people have a challenge with because they don't know how to define it and they don't know how to handle it. What are the consequences? What can you do about it? Again, define what does success mean to you. Is it only money? Is it the lifestyle? Is it your mindset? Is it the peace and quiet that comes with it? How are you looking at success? What does it mean to you? Is it based on one parameter or do you have an index of them? What happens if you don't have success? What is it costing you? What are the consequences? And another thing that might be controversial is, what is your payoffs? A lot of times people say to me, hey Nazy, there is no payoff for me not succeeding. But the payoff might be they're not going to take any risks. They're not going to get out of their comfort zone. So pay attention to all of those things and ask yourself that question. Similarly, what happens if you do have the success? What are the payoffs? What are the consequences? And what are the costs? Again, somebody might say, Nazy, cost of success? Are you kidding me? It's all payoffs. But I say, think about it. Think about it really deeply, because some people might think, okay, I'm going to lose my relationship if I succeed. I don't want to make other people feel bad. So pay attention to that. You might have heard of lottery winners who have lost their relationship with their families. And what happens is that the lottery winners help their friends and families, and the friend and family thinks that they haven't done enough. So the lottery winners think that their friends and families are ungrateful, and the friend and family thinks they haven't done enough, and after all, who are they, and they don't deserve it, so they should share it. And what happens is that the relationship breaks up. And as you might have noticed or have heard, a lot of lottery winners go broke within 5 years. So that's very important. That's why I'm emphasizing on understanding these beliefs, these patterns, these thought signals. That takes us to our fourth game changer. Think about this scenario. When the traders have a few trades in a row go against them, or they have huge losses, what happens? There's usually two scenarios. They either become very cautious and they don't take all the signals that their system tells them to do. They start picking and choosing. They cut their winners short. They let their losers run long because they are hoping and wishing for it to come back, and hoping and wishing is not good strategy. Their focus is on losing. They trade not to lose. They become very fearful, and they come from a place of scarcity. This is one group. On the other hand, the other group becomes more aggressive, and they try to make up all of their losses in one trade. Do you know anybody like that? I just had somebody contacted me that was one of their problems. They see opportunities when there are none. They increase their position size when it doesn't warrant the risk. They become more like a gambler, and they throw away their risk management and they throw away their rules because they get so anxious about it. They're afraid of losing. What happens is that in both cases, they are frustrated. They are facing a downhill spiral that they have a hard time getting out of. And this is very real for a lot of people. They might feel that they are either scared or they want revenge. They want to prove that they can beat the market. They are smarter than the market after all, and they want to show who is in charge. What happens is that their emotions get better of them, and they're not focused. They are not in their trading zone. You might have heard that in order to be successful, you have to leave your emotions at the door, or you might have heard that you have to have ice in your veins. I completely disagree with that, because your emotions are your emotions. It's how you handle them that makes a difference. As you might have noticed through all this presentation, I've been bringing up your feelings, which are your internal signals. That's what gives you a lot of information. That's what, and we are ignoring those kind of information instead of paying attention to them, understanding them, looking at their patterns. What differentiates it? The elite traders know how to manage their emotions and stay in their zone. As I said, it's very important to pay attention to these internal signals. It's important to find out what meaning it is for you, because all we are individuals and human beings. There are certain patterns that we can look at and understand what it means. And if we don't like them, we can change those patterns. I remember another client of mine who was very successful. But when a trade was going against them, he was taking it very personally. I just want to share a secret with you, which might not be that much of a secret, but it is important to notice, is that market doesn't care about you. It doesn't care how smart you are. It doesn't care how much money you have. It doesn't care how knowledgeable you are. It doesn't care how many wins and losses you have. It's sad, but it's true. The market is neutral. The market is what it is. So after working together, he learned how to look at these things and not to take it personally, so he can enjoy his trading again. There is a quote by Norman Vincent Peale that says, "Any act facing us is not as important as our attitude toward it, for that determines our success or failure. Let me read that quote again, because it's very important to think about it. Any fact facing us is not as important as our attitude facing it, for that determines our success or failure. So, if you think about it, you might have 4 people at 4 corners of a street, and when an accident happens, and if you go and talk to those 4 people, they will give you a different view because they are processing it through their filters. And it's important to how we look at a situation, and that determines what we do. What can we do about it? Notice how you're reacting to a situation. For instance, if a trade goes against you, how are you reacting? Ask yourself, what are you having that reaction? What does it mean to you? Does it mean that you're a bad trader if it goes against you? Or do you think about it as part of the game? That determines how it's going to happen. And if those thoughts and beliefs doesn't serve you, you can shift them. Guess who has given you those thoughts? Yourself. So if you are in charge, you can reprogram yourself. That takes us to the 5th game changer. And this is what I have seen people deal with, is that the majority of traders think that their decisions are permanent. So what happens when they think that is that they agonize over making decisions. They go through analysis paralysis. They try to get as much data or confirmation as they can. They want to be perfect. They have problem with pulling the trigger because they don't want to make any mistakes. And they become frozen at the screen, and they're unwilling to take any chances, and they miss a lot of opportunities. So how does that impact them? They feel frustration, they start to procrastinate, they have anxiety, they feel stuck, they feel nervous, they have resistance, they are not focused, and they don't feel good about themselves. And worst of all, they feel out of control. And those are very important to notice. We have to notice that our decisions are as of now, because the information we have right now determines what decision we're going to make. And small steps are absolutely okay. Think about this. If you are in the 1st grade versus whether you are in your senior class in high school, you don't expect that you make the same kind of decision, do you? But a lot of us hold ourselves accountable for the mistakes or decisions that we made in the past, and we don't move forward. There is this quote that's by John Harning that says, good judgment comes from experience, and experience comes from bad judgment. Again, if you had a huge loss in your trades, you might be too gun shy. But it's about understanding that it's part of your experience and what you're going through. Of course, you want to minimize your bad judgment, and that's why you're here. That's why you're taking mentorship from Gail, and that's an amazing thing because you're ahead of a lot of people. I like to use this quote, and I know majority of you probably have heard it, but I always think that's a good reminder. Can you say who said the following? Think about it. I have missed more than 9,000 shots in my career. I have lost almost 300 games on 26 occasions. On 26 occasions, I have been entrusted to take the game-winning shot, and I miss. I have failed over and over and over again in my life, and that's precisely why I succeeded. I'm sure a lot of you know that. And if you have guessed Michael Jordan, you're right. This is a reminder for us that we are running a business, and it takes practice, and it takes perseverance. And yes, there are times that we are going to lose trades, or, you know, today, as Gail mentioned earlier, was sort of a negative day, which is okay because that's part of life. So we have to understand that we're going through these battles. What can you do? Start making decisions and start with small steps. That might be saying the obvious. However, nothing works better than practice. You know, again, if you have a huge loss and you're gun shy and you can't pull the trigger, it's about starting with small positions and taking small profits. You might leave money on the table, but that's okay. Because if you start taking profits, you're building your confidence and you're building your momentum. And small things adds up to the big things, and you can move forward. There is another quote, and I've heard that in Harry Potter movies, that says, we are not defined by our abilities, we are defined by our choices. So what are you choosing to do? When adversity comes to you, or when something is hard, do you back up, or do you ask yourself, how can I do it? How can I use the information? How can I make a decision? How can I move forward? Taking the action is the key to any trading success. So it's very, very important to take action. I know I have been talking for some time, and I'm sure that Gail has asked you to download the consistency assessment. So you have heard me talk about the 5 game changers. You have heard me talk about the signals. Now we want to know how your internal consistency is. What I want you to do is to, bring out your consistency assessments. And what we're going to do about it is that we're going to go over it. I don't want you to think too much about it. This one is not about analysis paralysis. I'm going to read it, and you're going to rate yourself from 1 to 10. 1 is you're completely 100% disagreeing with that statement, and 10 is you're 100% agreeing with it. Again, this is for your own use. This is about you understanding where you are. This is not about judgment. This is about clarity, which clarity is about power. It's about knowing what it is. So, just bring those things up, and if you are ready, we are going to go through them. Again, rate yourself, and here we go. The first one, I take my wins for granted. I feel if I celebrate the interim steps, it makes me complacent. When I lose a trade, I feel stupid. When I trade not to lose. I get bored easily. When I lose a trade, I try to make all of my losses in the next trade. When I place my trade, I'm afraid of losing. I let my losers run. I cut my winners short. I'm not having fun when I trade. Again, this is not about judgment. This is about understanding of your signals. I don't think about my trading as a business. I expect overnight success. I don't believe or admit to myself that trading is a marathon. I don't consider myself disciplined. I don't follow my plan. I don't have contingency plans. I change my plans when I get nervous. I get distracted easily. I get influenced by what others tell me. When I lose a trade, I take it personally. When I trade, I don't trade to win. When I place my trade, I do expect to lose. I don't enjoy trading. I think about my trading as a hobby. I believe trading is a sprint. I value others' opinion more than my own. The size of my position doesn't justify the risk that I'm taking. I focus on my losses. I'm afraid of losing opportunities. I see opportunities when there is none. I let my emotions get the best of me. I believe that this is a zero-sum game. I believe in an opportunity passes me by, the next one is hard to come. I don't celebrate my wins. I do jump from one system to another. I do jump from one market to another. I don't have a clear strategy for entering a trade. I don't have a clear strategy for exiting a trade. I don't know what style of trading best suits me. I am a perfectionist. I want to be right even at the cost of making money. I do go after the hottest market. I don't accept losing as part of the trading game. I don't consider myself a patient trader. I don't stick to my drawdown limits. When I have a drawdown, I just look at the dollar amount. My ego gets in the way of my judgment. I trust others more than myself. I ignore my rules. I ignore my trading plan. I am trigger happy. I can be overconfident. I sabotage myself. I often change my time horizon while I'm in a trade. I don't have confidence in my system. I don't review my business plan on a quarterly basis. I execute the next trade based on the result of the previous trade. I don't take breaks during my trading day. I don't respect the market. I'm harsh with myself when I break my rules. After a loss, I have a hard time motivating myself. I have a hard time accepting that even when I do everything right, markets can go against me. I say to myself, why me? I don't keep a detailed daily journal. I do give back too much profit. I don't have a good money management system. I am indecisive. I am an all or none person. I have a hard time pulling the trigger. I haven't spent necessary time to test my system. I lose when I increase my position size. I do blame my system for my results. I blame the markets for my results. I let my fears limit my trading activities. I don't have a budget for trying new strategies. I'm constantly comparing myself with others. When I get bored, I sabotage myself. I am looking for excitement through my trading. I don't have a supportive environment. I don't take responsibility for my own results. Have you done that? Have you gone through it? I want you to know that each statement that you gave yourself a score of 5 or higher is a contributor to your inconsistency. So maybe now somebody wants to share with us what are some of the ones that they notice about themselves. Would anybody want to share what that is?
I'm waiting on them to type up a response, Nazy.
Okay, thank you.
Nazy, can you see the responses?
Yes. Let me go up back it again. Sorry. One says fear of losing.
Mm-hmm.
I get number 32 as a 8, which was my highest. Let me see what number 32 was. I haven't memorized all of them. I believe that it's a zero-sum game. Great. And don't understand number 16. I have a stop. Does that count? Number 16. I don't have contingency plan. What I mean by contingency plan is that, you are the owner of your own business. What happens if you have a stop and you lose connection? You lose electricity. Or for whatever reason your computer crashes and you are not able to, you haven't thought about those things. What happens at that point? Those are some of the contingency plans, the backup plans, because even when you go to the big corporations, one of the things they think is, what can I do if things go against me? A lot of us are solopreneurs or entrepreneurs, and we do trading on our own. What happens if you get sick? Do you have a contingency plan for that? What happens if something happens that you cannot do? So those are some of the things that I want you to think about. Do you have backups for your trading? Do you have savings? What have you done as contingency plans? Does that answer your question? Okay. I'll go to the next question. I hope that answered that previous audience's question. I want you to self-examine and say, what did you learn from going through this experience? What stood out for you? What thoughts or insights come up for you? Did you make a distinction? Did you get reaffirmed? So it's about what you're going through, and for one of the guys was that they're afraid of losses, or that they believe it's a zero-sum game. Notice how that can impact your trading. Or if you don't have a contingency plans and if you don't have savings in the account, how does that impact you? Where do you go with that? The third thing is, how are you going to apply what you have learned to your trading business? So, I'm just using the guy who said zero-sum game. Not that you know that that's going to impact you. How can you do that? What can you use? What can you substitute instead of that in order to empower you so you can make your trading business a better business? How that impact your decision making? How will your trading business be different as you apply that? So it's about you asking, how would it be different? It's about you seeing your business in a different way, because if we cannot see it, we cannot move toward it. And how would you feel when you notice these changes? I know today I'm talking about feelings a lot because those are your internal signals. Those are one of the most important data points that you have. And if you don't understand them, if you don't know the messages, and if you don't know how you pack your reactions, you are not going to be in the best position to move forward. You can ignore it for a while, but then it's going to come up and show itself in different ways. Oh, I didn't see this. Some of the guys says, I'm very competitive trader. I get bored easily. and I let my losers run in a long hoping it comes back. Yeah, that kind of a strategy is like hoping and wishing, and I'm very glad that you're doing that. So it's not about judging it, it's about understanding, okay, if that's me, how can I put steps in between to create that. And for the person says that is a competitive trader, the only true competition is with yourself, because we cannot control others. We don't know what their background is. Like if you're comparing yourself with Gail, Gail has been in this business for a while. She has experienced it. She has gone through trenches. She has done a lot of wins and losses. And you today, if you're starting, and I don't know what your background is, you cannot expect your success to be exactly like Gail, because she has paid her dues. and it's about you creating that experience, that thing that would make it so for you. I get bored. That is very true. That's one of the most common ones that I hear. So for you that you're getting bored is about not that I know I'm getting bored, what strategies can I use so I don't create trades for myself. There are times that if you get bored, you just have to walk away from your terminal, or you can do some other things that is distracting you. Definitely you need to take some breaks with that. Chasing the hot market as opposed to learning one or two that are closer to my current ability. That's a very good point, because it's about knowing who you are. It's when you're knowing who you are, then that comes with a calm confidence that you have. Then you don't have to chase the market, because then with the markets that you have and with the strategies that you have, you are going to make a lot of money. And it's not about big home runs. It's the story of the turtle and the rabbit, and the rabbit goes through sprints, but the turtle slowly goes through, and the winner is the turtle, not the rabbit. So again, these are all about understanding where you are, and not that you are, what strategies can you use. Fear of losing, fear of pulling the trigger. Always see several possibilities leads to inactivity. Okay, that is true. It's when you have a fear of pulling trigger, it's you think the consequences are going to be bad. So one of the things you can do is your position size. Bring your position size down in a way that if it goes against you, it's no big deal. And that's how you build the confidence about which signal to pick, because a confused mind doesn't make a decision. But it's about chunking it down, chunk your position, chunk your numbers down in a way that is acceptable for you, so you don't get overwhelmed. It's not about anybody else's perception, it's only about you. Okay, I have a hard time pulling the trigger is my top one. Again, a lot of us think that our decisions are final. And it's not about it being final. It's about, getting into small positions and taking small profits. So at the beginning, if you get nervous, create tighter stops for yourself. And you want to create that habit, that momentum, so you can pull the trigger. If you cannot do it with real money, get into a simulated account, because a simulated account shows you the potential. Because a lot of people go to simulated accounts, and then when they come to real money, they are not getting the same results, because with the real money, a lot of emotions and those things come into. If you have very difficulty, start with simulated accounts, then get more comfortable, come into real account. But if you stay on the side you will not be able to be in the game, and you're not going to be successful in what you want. Great. Number 9, con winners short. 34, I don't celebrate my wins. Thank you all you guys for sharing these things. I really, really appreciate it. And not sharing your wins is one of the most important things that we got to do, because a lot of us think that we become complacent if we share a win. But the thing is, it's about an encouragement. And more importantly, it's about sharing your, celebrating your day. So if you're in the market, if you're looking at your charts, celebrate your day regardless of the results. And that's one of the biggest gifts that you can give yourself. I often use this this example. It's like when you see a little baby and the baby has started crawling and it just stands up and then the baby falls down. Do we punish that baby? Normally we don't. Normally we clap the hell and say, hooray, you have done amazing. And then the baby gets encouraged to pick up and go, regardless of what the results was. So we need that kind of encouragement to give ourselves. And it's about creating that momentum. The celebration creates momentum for us. Number 62, I have a hard time accepting that even when I do everything right, markets go against me. Great. Again, this is part of trading business. Because the thing is, as I said, markets are the markets. We have to be in tune with it. We saw something about it, and it goes against us. It doesn't mean we haven't done anything wrong. I know that when we were in school, one of our upbringing was that, you know, if you do everything wrong, things will go your way. Or, you know, those were some of the things that we were brought up, our ideas with the church, with everything else. But the truth of the matter is, this is a business that is different. And like any other businesses, if you have been in corporate worlds or other businesses, you know you can do everything right, but it might be the client that is thinking it in a different way. So the markets are dynamic, and when you make the decision and it was right at that moment, in a second from that, the markets have changed because they have a dynamic nature. It's not a static nature. So it's about you being in tune with that and realizing that's the part of the business. Again, with all of these things that I'm sharing with you, asking yourself, how can I use that? Does that make sense for me? If it doesn't, find out a way that does. Okay. I am confused. For example, what difference does it make if we believe futures trading is a zero-sum game or not? Okay. The reason what happens is that if you believe it's a zero-sum game, you might think that I'm taking somebody else's share. And if you believe that by me having money, somebody else will not have money, that might bring some of the beliefs that I'm taking somebody else's food or somebody else's kind of thing. And that might not allow you to really be present in the market. So that's why it will impact you. Does that answer your question as far as the zero-sum game? How do you change someone's personal beliefs? Well, the first step is about noticing it. And it's about understanding what belief is telling you and understand what meaning you associate with it. The next thing is about changing the meaning that you associate with it. So, you know, let's have the above example till I get to the further in the list, is if you believe zero-sum game, and if you have a zero-sum game And because of that, you might not be as aggressive because you think if I win, somebody else must lose. And if I'm losing, somebody else might win. That would create an uncomfortable feeling for you. You might think, okay, the other meaning that I want to associate with it is that the world is not a zero-sum game, and it's an abundance. So everybody can have to the extent that they wanted to have. That gives you a freedom because it doesn't mean that you're taking food from somebody else's mouth. I hope that clarifies it. That is what I mean. I'm competitive with myself and compared to others, but to myself. That is very good, to be competitive with yourself. But the thing is, sometimes if we don't stop and if we don't celebrate where we are at that moment, and we're always looking in the future, we are not in the present. It's very good to be competitive with ourselves and always try to improve them. But it's very, very important to acknowledge where we are, to give ourselves a pat in the back and notice how much we have accomplished. Because a lot of times we forget what we have accomplished and we only see the glass half empty. And that's what creates some of the sabotage patterns. But it's, the reason we are all successful, the reason we are going through the education and all of these things is because we are competitive with ourselves and we want to move forward. Very good point. Also, a Forex account set up for micro or zero 10-tick can be a nice balance of simulation and real emotion psychology. Good, good. You enter a game, you know the risk. That is true. It's a, this is a game that has some risk associated with it. And you have to understand that's why the risk profile is very, very important. What do you think? Who are you? What kind of risk are you allowing to do or not? I had a client who was a brilliant trader. But what he used to do was that he was a position trader. He loved to analyze data, go over it back and forth, and then make his decision. He changed jobs, and they asked him to become a day trader. You can imagine what happened to him. He wasn't very successful at the beginning because he was being overwhelmed. He couldn't make decisions correctly. Quickly, not correctly. He couldn't make decisions quickly. So it's about understanding who you are. And the thing is, there are ways that you can adjust to become use another strategy if you want to. But if you jumped from one to other without realizing what your strengths are, then that can impact you. Cool. I really, really want to thank all of you for participating and sharing these things because you have been amazing, and I want to thank you for that.
Nazy,
Yes.
Katie wants to know, why would being harsh with yourself when you break your rules be a bad thing?
Because the thing is that when you're harsh with yourself, you are not coming from you're punishing yourself. And when you punish yourself, you force yourself, you're putting yourself down. When you're breaking your rules, it's about understanding why you broke it. It's about compassion and where you're coming from. So if you break your rules, it's about saying, okay, I did something that I wasn't meant to do. I understand that. Let's understand why I didn't and how can I do it better. But if I'm harsh on myself, I put myself down, so my energy goes further down. And when my emotion becomes further down, then I'm not in the best place to make a decision. When we are in a more upward energy, and when we are forgiving ourselves, what it means is that we are not willing to punish ourselves. When we are too harsh on ourselves, we are punishing. And this is not about punishment. This is about knowing where you are and how can you move forward. punishment, to me, never has been a motivator. You know, some kids know they're going to get punished and they do it anyway. It's about a rebelling for them. So I don't know your situation in that sense, but when you're too harsh on yourself, you are not in the best best creative mind to find out why you haven't done it. And the question is, and you will repeat it again, and you will repeat it again. So it's understanding where you are, what caused you, and how can you move forward. Acknowledging I did something wrong. Acknowledgement is very different than punishment. So we are not asking you to ignore it and say, oh, everything is right. No, I broke this rule. Okay, let me take a break. Let me walk away. What caused me to break this rule? And how can I do it better? What did I learn from it? Because when you learn something from something, you haven't done anything wrong. You have just, it helped you to grow. Does that answer your question?
It does.
Okay, perfect. So, um, let's review. Oh, if you guys have already got the copy of this assessment, but if you, for whatever reason, need another copy, you can go to Gail, ask her, or you can send me an email and just on the subject line put Gail and then consistency assessment, and I'll send you a copy or give you more feedback. If you have questions, feel free to contact me at info@mental-edge-trading, but make sure you put Gail on the subject matter so I know where you guys are coming from.
Nazy, don't you have a
Yes.
webinar coming up?
Yes, I will tell you. I was just going to overview what we did and talk about the webinar, if that's okay.
Oh, it's fine. I just wanted to make sure.
Absolutely. The webinar is coming on March 28th, but I just wanted to review what we have learned so far. Go through a quick review of it and talk about the webinar. Do we still have time?
You have as much time as you need.
Thank you. I just wanted to talk about what we have learned so far and what we covered. We talked about the human capital risk, and we talked about that how we set our markets and strategies and systems, and we don't get the P&L because we don't do what we know to do, and that's human capital risk. Then we talked about how it impacts all aspects of our trading, which is your focus, your discipline, when you overtrade, when you don't have your confidence or you can't adapt, and how you handle your winners and losers. Then we talked about the first game changer, adapting what you learn to who you are. We said if you don't, you start doubting yourself, doubting your capability and judgment, feeling overwhelmed, feeling frustrated and exhausted. Again, these are signals. Pay attention to them. What can you do? It's about know who you are and what's your risk profile. And this goes back to some of the things that you guys were talking about. Be very honest with yourself and ask, does the strategy fit me? Am I comfortable with the risk-reward ratio? Am I comfortable with the frequency of the trades? If not, find out what strategy works for you and then do that. The second game changer, and I see that a lot, is paying attention to your financial thermostat. Because if you don't, you go through a yo-yo effect. Your trading business doesn't grow, you can't make money consistently. And the important thing is to find out where it is and adjust it, because we all have control over it when we become aware of how we set it. The third game changer is that the majority of traders seem to have one foot on the gas and another on the brake. And by that, I mean that they tell you why they want it, and then the next sentence they tell you why they cannot have it. And they feel worry and concern, they have a pit in their stomach, and they are not in control. And we talked about understanding what success means to you. What happens if you don't have the success? And again, I talked about the three things: the costs, the consequences, and the payoffs. And what happens if you do have the success: costs, consequences, and payoffs. Understand both sides of it, and that becomes very important. The fourth game changer was not staying that long in your trading zone. We were talking about this earlier. When your emotions get high, your decision-making process goes down. If you are worried and concerned, and if you are in that panic mode, your emotions are high and you're not going to make the best decisions. You're not going to be able to be objective. Think about it. If you're very angry, you might say the words or do the things that you wouldn't otherwise do. But when you take some time to set aside and you calm down, you can think about those things more logically and make a better decision. You might feel that when your emotions are high, that you're afraid of the market, that you want to take revenge, or you want to prove that you can beat the market, that you are smarter than the market, and that you want to show who is in charge. You know, as I said to you, it's sad but true, but the market doesn't care. And it's important to learn what emotions are telling you. Notice your behavior, and if it doesn't serve you, change your reaction so that it will empower you. Different emotions might have different impacts on different people. So understand what your emotions are telling you. And the fifth game changer is that the majority of traders think that their decisions are permanent. How does that impact them? They agonize over making decisions, and they go through analysis paralysis, and they want to be perfect. That's one of the reasons people don't pull the triggers. Because they want to be right. They're afraid of being wrong. How do they feel? They feel frustration. They start procrastinating, and they don't feel good about themselves. You know, taking action is the key to your trading success. You know, as you might have imagined, we just barely touched the surface, and there is a lot more to go through these things and actually find out how to apply and integrate it in your trading business. So if it's okay, I tell you about a program that I designed to do actually that, and for you to get more comfortable with it and have a lot more tools and tactics to do that for you. This is a 4-week webinar. It's done exactly like this. Over the phone, you see me talking. It's live, and you can ask questions. The first module deals with your personal risk profile. We get clear what it is. We uncover your programming and create a game plan specifically for you, which enables you to be the kind of the trader you always imagine yourself to be, and reach the next level of your trading business. You learn how to recalibrate your skill sets and get the results that you always wanted. Again, it's about knowing yourself, what your decision makings are, what your tendencies are, and how you can apply that. Money management. We covered the costly pitfalls and how to avoid them. This money management is different than majority of them because we determine your financial thermostat and capacity and give you the necessary tools to modify them so you can enjoy the lifestyle that you want. You learn how to recognize and stop the sabotage patterns that causes your yo-yo effect. Essentially, we clear the deck for what's most important to the growth and success of your business. We do both an inner and outer money management. So you get the internal ones, you find out the financial thermostat, and then you go through another one that deals with the other one, which is about your strategies and how you handle that. You get templates for both. The third module deals with unshackling your power, how to harness your attitude so your trading business can flourish to the next level. This is very important. This is the process that enables you to align your goals with the actions so you can get the results that you want. This is about your internal signals, how to recognize them, what to do them, how to harness them. And it's about not sabotaging yourself so you can harness your attitudes and go to the next level. And the last module is getting in and staying in your trading zone. This is very, very important. This is about understanding what it means, because understanding what it means to be present, to be in tune with the market. When you put on a trade, if you expect a certain results to come out and you only focus on the results, then you are not present and you're not seeing, as we said, market is very dynamic. You're not being in tune with what the market is telling you. So it's very, very important for you to learn how to put your trade on. And again, you put the intention of winning. Remember what we talked about at the beginning, intention, but you are not attached to how the result is going to be. But what happens is when you do that, you're present in the market and you can see how it goes back and forth. This next program starts on Monday, March 28th. You might ask, okay, how much does it cost? Well, before saying that, I want you to look at an impact of realistic reduction in your losses. This is just your losses, if you trim your losses. If you trim your losses on an average day by $100, in a year, you have over $25,000. Even if you trim your losses by $50, that's about $12,600. $25, that's about $6,300. And this is not even including increasing the size of your winners, compounding, increasing your position size, or other avenues of profit that will be open to you. So how does this program work? I have created two packages. One is a basic package and one is a premium package. The basic package is for the people that say, hey, I just need the information, I can do it on my own, I don't need any feedbacks. The premium package is for the people that say, hey, I like the information, I understand the value of feedback, I understand that the tweaking and that can accelerate my success and create that momentum for me. In both packages, you're going to get a feedback on your coaching questionnaires because you're going to have questionnaires on that. You're going to have 4 one-hour live sessions, exactly like what we are doing, and it'll be followed by 4 half-an-hour live Q&A. And I promise you I'll be there as long as the questions are going to be there. You're going to get access to my tools and strategies, and we're going to have a private forum that is for our group only, for the people who sign in on March 28th. For the premium package, they get unlimited email coaching through the course. So if they want nobody else to see their questions and they want to send me direct questions, they have unlimited access to that. They get private feedback on their action plans. After each week, we're going to have action plans, so you will integrate what you learn into your trading business. And at the end, for the premium package, they have 2 half-an-hour private coaching sessions with me. So they get to ask any questions that comes up with regard to the classes or anything else that comes up. I priced it very reasonably because I want people to be really successful in their trading. For the basic package, the price is $597, and for premium package is $997. But I have a early bird special, and it is right now $497 and $897. Again, the class starts on March 28th. And I just want you to think about this. If you're ready to take the next step. If you are, go to consistently boost your profits and ask for that. Imagine what it is that you want to get in the next months or the next few months, or what can you have it and how you can achieve it. If this is the right thing for you, go ahead right now and take that step and sign up for it. And if it's not, that's absolutely perfect too. So with that, I open it up again to questions and answers.
Thank you, Nazy. I would
Oh,
encourage everybody in this room, at the bare minimum, to go through her basic package. I intend to do it myself. I think what Nazy has to offer is outstanding. And believe me, $4.97 is a drop in the bucket to what you're going to lose by not going through it. And I can't stress that enough. What time are the seminars, Nazy? Or the webinars, I'm sorry.
The webinars are Mondays starting at 5 p.m. Eastern Standard Time.
Okay. And you will be surprised at how simple most of your issues are and can be overcome. You just need help getting there. And this is why I asked Nazy to come in. Does anybody have any questions about it? Do you know where to go to sign up? Nazy is absolutely wonderful.
Thank you.
And, we talk a lot about how to implement knowledge, and without that implementation, you don't get anywhere. If you go to consistently boost your profits, Angel, at the bottom of the page, I believe, is where you would sign up.
It's at the top of the page. It says www.consistentlyboostyourprofits.com.
Okay. If you go to consistently boost your profits, I got too many screens here. So, let's see. What is the cutoff date for the early bird registration?
I will cut it off a week before the class.
Okay.
That starts. But the thing is, if you guys are interested, sign up for it now, because we are creatures of habit. We intend to do one thing and then we forget about it, and we procrastinate. A lot of times we do that. So,
I mean, if you save 1 week of losses, you have saved the cost of the course. Let's see. Terry is going to be out of town in April. Is there another time that it will be offered, Nazy?
yes, but I haven't set that date yet. I set them one at a time because I want to focus on that. But I will come up with another one. Probably, let's see, in May or June. Yes, but I haven't set that date yet.
Okay, does anybody else have any questions?